Yo, what is up, everyone? My name is Dom, and we're here to talk about unusual options activity. All right, let's kick it off with the disclaimer. So, this video is for educational purposes only. The statements made in this programming are solely the opinion of the show and are not a specific inducement to make an investment. One must perform their own due diligence and realize that all investments carry risk. There's no guarantee of profit. Man, that gets to be a tongue twister to say every single video. So, all right, first one I want to bring up here is the XLF. Now, I brought this one up on the channel many times. As you can see here, I have many different positions in the XLF. I have January 2022 calls. I have a call spread out in May that I brought both those up on the channel before. So we're still in this call spread. As you can see, it's moved up from where we bought it. It's in the money. We have a profit in this one. And there was some more buying in some April 16th 35 strike calls. 70,000 contracts traded today. Now, there's a couple reasons why I wanted to bring this one up. Tomorrow, we have a CPI number, Consumer Price Index. It's a read on inflation. So you have the PPI and you have the CPI. The stuff that gets passed off to consumers is the CPI. The PPI is the producers index measuring inflation. So manufacturers and stuff. Now, this is kind of, people could be buying these calls for two reasons. There's bank earnings this week and also I think into the beginning of next week, and the CPI comes out. If the CPI comes out as a hot number tomorrow, people are going to be dumping bonds. Therefore, interest rates are going to be going up, and that is very beneficial for the banks. That is one reason why I have a large position in Bank of America and why I own so many different calls in the XLF. I'm really bullish on the banks, and it's also a rotation of value. And there's bank earnings. I think bank earnings are going to be really good. They have a lot of money that they set aside at the beginning of the pandemic in their loan loss reserves, and they have not had to use a lot of that money, so that's just going to come back into earnings, and could be an upside surprise here for the earnings. Another reason why I want to play the XLF into earnings is because look at how low this implied volatility is here. 21%. That is extremely low. If you look at these option stats here, the current IV percentile is 0. That means it is at a 52-week low for implied volatility. Remember, the lower the implied volatility, the cheaper the options. If you look at these April 16th options here, for an in-the-money call, this call is in the money by about 30 cents. You're going to pay 47 cents to buy this call. So your break-even point is only 15 cents above the current spot price of $35.30. You're buying a 35 strike call. The stock is at $35.30, and you're paying 45 cents, call it, to control 100 shares of the XLF. That is extremely cheap. This option does expire, this week on Friday, but that is extremely cheap. Your break even is only 15 cents above. So if the XLF closes on Friday at $35.45, only 15 cents above. As you can see here, 15 cents is about 0.5% move. That is extremely cheap. This is a solid trade here. I would not usually say that about this short term of options, but because of how in the money this call is, relative to how cheap it is, the XLF only needs to be at $35.45 on Friday, and you break even. So this is a pretty high probability, in my opinion here. With the bank earnings coming around, there's a catalyst here. I think there's a lot of catalysts here for the XLF. This short-term trade is a little bit risky here, but I love the risk reward on this one because of how low the implied volatility is. This is such a cheap bet. This is such a cheap bet. It is unreal. So I jumped in these calls. If the XLF is down tomorrow, I will definitely be adding to these calls because of how cheap they are. Possibly even adding to some other calls because this implied volatility is so cheap, and this is a time to be buying options when the implied volatility is low, and buying straight calls when the implied volatility is this low is not a bad idea. Usually I try to do a vertical spread or something like that. So sorry I took up that much time talking about it. There's a lot to explain with this one, so I wanted to get all that out. So next one I'm bringing up here is a pretty speculative trade here. Now, this is not going to be for everyone here. This is CAN. This is sort of a Bitcoin play here, a supercomputing here stock here. Now, this stock was down 30% today on earnings. Now, full disclosure, I got into these options. We got the 12.5 20 vertical call spread. So he bought the 12.5, sold the 20. As you can see here, the implied volatility compared to the XLF was 20. This implied volatility is 175%. That is ridiculous. These options are very expensive. This trade is not for everybody, but there was some nice orders in here. Volume of about 30,000, open interest of about 47. And quite honestly, if this stock moves up tomorrow and I can get maybe a 20 to 30 to especially a 50% profit in these, I will be out and gone tomorrow. This is a very speculative trade. Obviously these people, they're buying make calls. They're planning to be in this trade for probably a month. But I definitely praise speculation to some extent. But that's pretty much all I'm going to say about that. So. We can take a look at the chart here. If you take a look at the chart here, this thing has been in a steady downtrend here. So the chart doesn't look too strong. I just saw that this stock was down 30% today. I thought it might have been a little bit of an overreaction. So we'll see what this one does tomorrow. If this one trades down big again tomorrow, I might even just cut the loss. So you guys have to do your own due diligence and decide how much risk you want to take. I'm just here to explain what I'm doing, and hopefully everyone here can learn from that. So, thanks to everyone who's been subscribing. I really appreciate it. Make sure to keep subscribing. Make sure to leave a comment down below if you got any questions, and we'll see you in the next one, everyone.